Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex. This is where we take a look at the markets that we see at the moment, and we create a game plan for tomorrow on our Big Six. Now, the Big Six consists of 3 futures markets and 3 Forex markets. It's going to be gold, crude oil, and the Dow, as well as the euro, the pound, and the yen. This edition's coming at you for trading on the 31st, the final day of the first month of 2017. I hope everyone had a great first month of the 2017 year. Now that it's behind us, great time to reflect on the trades you've taken and just overview all of the things that have been going on so far. And, you know, it's a great time just to kind of adjust your strategy as needed now that you've got a month under your belt. It's very typical to see years change from year to year, and the way that we need to approach them also needs to change to stay along with the times. So good time to go through all of that review. Now, in terms of tomorrow, what we're looking at, there's a lot of news. For the Australian session, not a whole lot, but as we go into the Japanese session, we have the Bank of Japan press conference starting off at 1:30 Eastern, and then we go into 3 o'clock tomorrow morning with the ECB President Draghi speaking, and then we have the German unemployment rates, and then the European CPI, and then in Canada at 8:30 tomorrow, we have the GDP, and then for the US at 10 o'clock, we've got the CB consumer confidence. So there's a lot of stuff going on tomorrow, and that should hopefully keep things going in terms of movement. So looking at gold, we kicked off the first day back after the weekend. Nice drive lower to start the morning off and found a major reversal back up. Now, with this big reversal back to the upside, that shows us that we may just be in a range, right? We started off with a new high, then into a new low, and it looked like it was going to stick around, but it didn't, and we made it all the way back up to the highs. So what we're running into now is we're seemingly putting in a top here. The buyers are not very interested up here. They're interested in buying the lows, rising support, areas of interest like that. But that's really about it. We're not seeing that good continuation like we've been seeing back here, where we're breaking out and keeping on that movement. So what that leads us to believe is that we're probably going to want to see a little bit more of a pullback. Treating this more as a range because we're more likely to transition into a range. We may still see a break of the high a day back above that 1201 area, but that said, we're not expecting a big move through the highs before we see them fade back. So at the moment, we are forming a little bit of a wedge. What I would really like to see is a quick little pullback. Now, what I would really like to see is down to 95.2 to 94.6, but that may be wishful thinking. We may have to just settle with 95.6 and maybe even a little bit above that. Either way, though, I don't want to be a buyer up here. We're actually in an area of inventory resistance, as well as further above that with another area of inventory resistance, right back around the 1200 mark. So this is not the place that I want to be buying. I want to be buying a pullback, and I want to buy as good of a price as the market will allow me. At the moment, it does look like sellers are attempting to take control. So that may be a nice opportunity to finish this move off to the downside, find support at the wedge bottom, maybe at those little trap lows underneath, and that's going to be where we're looking for the upside. Now, again, looking for the upside here, I'm not looking for a huge breakout anymore. That's kind of done and gone. We're going to be lucky if we can make it back to the highs. If we do make it back to the highs, I'm not expecting much through it, and possibly even sellers beginning to kick in to drive that market right back down. So looking to buy low and possibly looking to sell high, depending on how easily this transitions into a range phase. Over on crude oil, really nice bearish turn. We had a attempted drive lower early in the morning session that did open up a weekend gap. And when we tried to get back above it, ended up just being a head fake and dunked its way back down. We found a major area of support based off of that weekend gap at 52.53 to 52.46, with a further major objective down at 52.22 if they want to keep this bear train rolling. Now, pretty obvious that the sellers are still pretty much in control. We had a very steep decline in price, but we did end up with a little bit of a 3-push bottom. And a lot of times when you get those kinds of moves, it ends up pushing the market into more of a range for a while until they decide what they want to do. So with the 3-push bottom coming into a major support area off of that weekend gap, we're finding it a little bit difficult to sell too far down. What I would rather see is a quick pop up, maybe trapping above 81 to 83, or if they really want to go further up, get a nice trap back at 88. That was the area that we found a huge amount of support. Support turns into resistance. It'd be very nice to see the market return to that area and find the sellers re-enter for a move back down to those lows. The same thing, but inverted, that we were talking about on gold. If we do get back down down to the lows now after such a steep decline and a failure to continue, I'm not expecting a big new low. So what we're really looking to do is treat this more like a range, looking to sell high and then looking to push down and buy low. And we may have to buy low with a slight offset because it is a downtrend. You don't want to buy directly at the low because it still has a good chance of blowing through. But there's a good chance of a nice bounce down here for a quick move up, and maybe they treat it as resistance and push back down again from there. It all has to be seen, but right now, looking to sell at a higher move up. A nice, a good healthy retracement would help the sellers a lot in this case. Over on the Dow, big old weekend gap. We gapped underneath that 20,000 point. Everyone was so pumped up. We ended Friday above 20,000, Really, really awesome movement. And then we come in on Sunday and we open up at, 19,969. Well, wait a minute. What happened to the 20,000 level? So with that amount of fear that really kind of set in, it seems as though the market went into a little bit of a panic. We had a big spike lower right around the open at 9:30 going into 10 o'clock with continuation to the downside. But after that set in, we ended up with a fairly decent move back up. Now, one thing that's really standing out, and this is something that hasn't happened for a while, is if we look at the TRIN, the TRIN, it's a market internal. It's basically a ratio of two ratios. For you members, there is a tutorial that goes over all of the information on that. But it's showing us something kind of interesting here. So switched up the charts here, and what we have in front of you is the TRIN. Now the TRIN, generally speaking, the three major levels that you want to keep an eye on is one is a big level, and that's an area that generally, if you're above it, if you're below it, that's bullish, bearish. But now we have the 1.5 and the 2 mark, and we actually pushed all the way up to 2. It's been a very long time since we've seen the TRIN push up into the 2, and we actually even closed above 1.5. That's giving us some very good bullish inclinations for the overnight session. We may be looking for a small gap to a medium gap tomorrow morning on the indices, which means that the overnight session is likely going to be a bullish one. So for you overnight traders, I would potentially be looking to the upside in the overnight, just to see if we can keep that move going, get a nice gap up in the morning, and then from there, maybe they want to sell off like crazy. But very interesting to see the TRIN responding this way. And again, this is the first time that we've seen it do it in a very, very long time. It's not the first time it's hit it in a while, but as you can see, even the 1.5 level, they've had really just a huge amount of trouble there. So the fact that we're finally now getting a move all the way up into 2s, a pullback down to 1.5, but still staying in this range is a big clue of potential bullishness in the overnight. So switching back over to the Dow, with that in mind, what we may end up be looking for tomorrow is, a possible trap high to become a seller still. I would love to sell it around that 905 to 893 area, but this may have a little bit more juice in its tank to keep it going. We do have that massive weekend gap back in the 20,000s again. Are we going to get there tomorrow? Probably not, but there's a good chance that they're going to make an attempt at it. Now, one big thing that a lot of times the markets will want to do is return to where it broke out from. We had this bearish move down, nice obvious cycle, and then it just fell apart. So chances are, if the buyers are going to come in the overnight session, what I would be looking for is for them to return to this area. This is where the breakout really began, and seeing the buyers go back into that location, that would prove whether or not the sellers want to defend it, or if they're going to fall apart and maybe we do get that weekend gap. So that area around, we'll just cut it in the middle and say 19,940 is going to be the area of major interest. But with everything speaking to the upside in the overnight, I really wouldn't want to sell yet. May wait for tomorrow's open at 9:30 before we start looking for possible sell attempts. Now, over on the Forex, we're looking at the euro. First up on the docket here, we have a big correction back up. Just a heavy V bottom all the way back up again. And now we have a bullish tone working its way higher. Now, inside this bullish tone, we have kind of a funky channel, right? Usually when you have a channel that's drawn like this, it doesn't stick around for very long because it's sort of inside the move. They like having the extremes fitting inside that channel. But this time, this one stuck around for a decent amount of time, since 1:30, 2 o'clock until now, going on to 8 o'clock. This one's been here for a while. So that basically tells us we need to pay attention to it. Now, whether or not we end up sticking with that one, it may widen out to the big one. That is definitely a possibility. But at the moment, we are finding resistance off of the earlier peaking top that formed inventory between 70.93 down to 70.41. And that's the area that we found a little bit of resistance so far in the overnight session, looking to pull back. This is still a very bullish market. We have a massive spike higher after the big spike down, completely negating the sell move, or at least the better half of the sell move. That doesn't account for this. But since we've done that, now we're looking at this as a possible bull attempt. And usually when we have that big spike up and it goes into a channel or a range, you're looking for them to come down to the lows and find trapping there to turn the support back up. So what I would really like to see is a dip down to 67.82, look for buying pressure to shove the market right back up to yesterday's high. And that's up at 74.02. Over on the pound bearish and kind of seeing the same thing, one of those really kind of funky channels, and this one is also stuck around for a while. Now we are seeing them get a little overzealous up here. They're breaking out above it, and this is a bull channel that is breaking out higher. That's usually seen as unsustainable movement. The one thing that's really standing out in this case, though, that may be an argument for the buyers here, is simply the fact that earlier resistance that we had, or I'm sorry, earlier support that we had, double bottom right there, they broke out, found it as resistance, found it as a double top resistance. Now we've broken back up and are holding it as support. We may get a fairly decent few legs off of this level. And if it does end up breaking down, it may just turn into resistance again. But we certainly cannot ignore that 24,933 area because it is holding very aggressively. Now we do have a bear channel working its way down after that big spike in the early morning session. We formed a wide bear channel working its way lower, and we're getting a tight little correction back up. So really what I would like to see is for this to be a head fake and then tank back down, use it as resistance, and sell it lower. But if we can't get back underneath that 24,933 area, the buyers could easily have in their sights going back to the next obvious trapping area, which would be at least 51.67, if not 52.60. So at the moment, we have to be on the buy side. Not that I really want to. I would much rather sell. But we have to be on the buy side because they are the ones that are in control of the market at the moment. So until the buyers give up, we're looking to buy pullbacks. And then finally, on the yen very, very bearish momentum to the downside. Big weekend gap as well at 115.068. And we haven't even come back to test it yet. So we saw this last week as well, a big weekend gap going on the yen, and they finally filled it. I think it was on Wednesday where they finally filled that big weekend gap. That may be the same case for this too, right? We may have to wait until Wednesday, but right now there is an open weekend gap that is pointing to the upside. Now we do have a slight bull wedge correction going on here. The sellers tried to break out and failed, so we have to give the bias to the buyers. Probably going to see a bullish breakout, maybe just to retest those earlier areas of support, turn those into resistance around that 114.20 area to 114.10, and then look for selling pressure back down to the new low. But either way, with that big weekend gap looming up here, really hard to disbelieve the buyers are not going to want to at least try to get up to that 115.068. So at the moment, looking to buy in the short term. In the long term, I would still rather sell, but if possible, I would love to sell up at that weekend gap fill. So that's going to do it for the nightly outlook on futures and Forex. As always, if you have any questions, you can always shoot me an email, jbrink@slingshotfutures.com. So that's going to do it for this one. Like we always say, make a plan, trade that plan, follow those rules, and you will be A-OK. Until tomorrow, enjoy the rest of the night, and we will see you all later.